You're listening to AI Prism from Seoul Economic Daily.
Korea's stock market just had one of its roughest stretches in years. The KOSPI dropped 10.8% one day, then another 5.9% the next, triggering circuit breakers on back-to-back sessions. If you were watching your portfolio during that, you weren't alone. The data show Korea's top-performing retail traders didn't panic sell. They bought more Samsung electronics on the way down. At the same time, the US and Japan carried out their first joint currency intervention since 1998, adding a fresh source of market volatility. And the Fed's own chair is now considering cutting how often it even meets to set policy, a 45-year first that could mean less frequent signals for markets to react to. It's Monday, August 3rd. Let's look at what this means for retail investors in Korea. The sell-off unfolded as the KOSPI briefly fell below 6,000 for the first time in months, rattling even seasoned investors. Currency markets added to the turbulence after the yen's slide to a 1986 low near 163.9 per dollar forced Washington and Tokyo into coordinated buying. Against that backdrop, this week's US and Korean economic data, from inflation readings to jobs numbers, are shaping expectations for where markets head next. Here's what the numbers show. The KOSPI fell 10.8% to 6,023.66 on July 28th, then dropped another 5.9% to 5,663.24 on July 29th, its steepest two-day slide in recent memory. Top-performing retail traders, tracked across a portfolio of 164,978 accounts, bought a net 19.6 billion won, about $13.8 million, of Samsung electronics across those two sessions. Samsung electronics fell as much as 13.3% on the 28th and another 5.2% on the 29th, while SK Hynix dropped 14.64% in a single session. Fed Chair Kevin Waller is reportedly weighing a cut to the number of FOMC meetings per year, a structure unchanged since Paul Volcker set it at 8 meetings in 1981. Brokerages issued 14 price target upgrades and 23 downgrades on LG affiliates this past week, with Merit Securities cutting LG Electronics target from 260,000 won, about $183, to 220,000 won, about $154, despite maintaining a buy rating. Retail flows, a possible shift in Fed communication, and diverging analyst views are all moving at once, a reminder that volatility can cut both ways. So what does this mean for retail investors in Korea? Earlier, we said Korea's top traders bought more Samsung electronics as it fell. Here's what that actually means for you. It reflects a buy-the-dip pattern among experienced investors, not a signal that further declines are over. The yen intervention and a possible cut to Fed meeting frequency both point to less predictable, less frequent policy signals ahead, which typically means sharper, less telegraphed market moves. LG Electronics' price target cut, despite solid earnings, is a reminder that even good numbers can get discounted if the broader market's valuation multiple is falling. Know the difference between a company problem and a market-wide one. Korea's July CPI release this week for signs inflation is cooling from June's 3.2% pace. The Bank of Korea's June current account data, given how much of this year's surplus has come from semiconductor exports. Whether the Fed formally moves to cut FOMC meeting frequency, and how markets react to fewer scheduled policy signals. That's today's AI Prism, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.